Everyone.
Yeah, Deep sir, you are audible. You can share your screen, sir.
Okay. Is my screen visible, sir?
Uh, yes. Your screen. This command
Command
prompt
prompt.
and
Yes.
yes, Google Chrome is
So good
visible,
evening,
sir.
all. Yes. Good evening,
Yes, you
all.
can go ahead.
This is CA Pardeep Tayal from Hisar, Haryana. So today I am presenting my use case on AI-powered financial forecasting and analysis. For this purpose, first I am running the code, and in between I will tell the details about it. Is my screen still visible, sir?
Yes, sir, it is.
Okay. So this is the financial forecasting and analysis tool. Any business, whether it is a startup or an existing business, needs funds for running it, and funds are the core for every business. These are the base. For arranging the funds, the owners or the promoters have to go door by door, or sometimes to the bank and financial institutions, and sometimes to the proposed shareholders. So for this, everyone who is prepared to give the funds asks for the financial projections or forecastings, on the basis of which assessment of the financial health of an organization can be done. So I have preparing financial forecasting manually or with the help of traditional methods is very time taking and prone to some errors. And sometimes it is very difficult to apply latest financial models to do the forecasting. For this purpose, I have automated the process and I have developed this tool. So this AI-powered financial forecasting and analysis tool gives us two options for startups and for existing businesses. As far as first, I will show the existing businesses process. For this purpose, what I am doing is I am giving some audited financial statements of dummy financial statements of 2 years, and the tool will the tool will do is it will extract the data from these financial statements and structure it with the help of artificial intelligence. So it has started processing. So why I'm using AI for this purpose is because sometimes the financial statements are not in a standardized naming culture. In Schedule 3, the names are standard, but in proprietorship, partnership, and other organizations, the financial statements may not be in a standard structure. So here is the advantage of this. It can extract the data and structure the data from whatever may be the document. So now it is running with the help of AI, and it will fetch the data from it and structure it in a manner that can be used by the tool for forecasting purpose. Here is the option of selecting number of years. It is ranging from 1 year to 10 years. So I have, for the ease of reference, I have taken 3 years. So you can see that it has successfully processed audited financial statements, and it has extracted the accounts, balance sheet accounts and income statement accounts. So here are the balance sheet accounts, equity, share capital, other equity, all the variables have been nicely fetched by it in the tool. And as far as income statement is concerned, revenue from operation, other income, total income, all the variables are here. Now it is asking about the selecting of variables for forecasting. It means whether we want to forecast for entire balance sheet, entire income and expenditure account, or selected variables. For now, I am selecting balance sheet and income statement. So when I start, and then it is asking about the part which we want to visualize after forecasting. So here I am taking profit for the period. We can select any variable. And when I press run forecast, it start processing. It will analyze the historical data given to it, and on that basis, it will forecast the variables. And it has 5 forecasting models available in it. You can see linear regression, simple growth, XG boost, profit, and ARIMA. These are all models accepted worldwide for forecasting purposes. I will brief about these. Linear regression is a model which which assumes constant growth over the time, and simple growth is a model which assumes exponential growth in the business. XGBoost is something which is constant, which assumes that the business will remain constant over the years. And Profit and ARIMA are the models which assume that the business will have other variables affecting its seasonality or other internal variables interacting with each other. So, and here what I said, I can select all balance sheet items or I can select individual variables also. Means the tool is giving us the facility to forecast entire balance sheet income and expenditure account, or we can select n number of variables which we want to specially forecast. It is forecasting. Here, all balance sheet items can be selected, all income expenditure accounts items can be selected, cash flow items can be selected from here. If we want to select individually, these can be selected from here. And after the running the forecast, it will give us the forecasting data variable wise and also consolidated in financial statements in the form of balance sheet and income expenditure account. And that data, and along with data, it will also get the give the visualization of the variable we have selected, profit for the period, and other basic variables which are very useful for having insight about the data. And that data which will be shown by it can be used for analysis purpose. I will show also that. So you can see that it has forecasted the results by section. You can see balance sheet. Here it is giving the number of years which we chose, and growth rate model, linear regression, profit. These are the model, and it is also calculating average of all these. For better understanding, we can go to the income statement. You can see revenue from operations. For in the year 2023, the revenue was 13 crore in the documents we have uploaded. And in the year 24, the revenue was 20 crore. Now you can see in the growth rate, it has considered is exponentially making it to 32 crore, 51 crore, 81 crore. And in linear regression, you can see it is having constant growth, a stagnant growth over the time. In profit and XGBoost, I said that it is taking the revenue at 20 crores only. And profit is the model which is similar to linear regression, but it also accounts for the holidays and other seasonal variations. So these are all the variables which have been forecasted by it. And now at the end, it is also giving the complete balance sheet for forecast and complete income statement forecast. These figures have been taken on average basis. And here is the visualization, key metrics, income statement. You can see revenue, other income, total income, cost of material, employees cost, etc. have been nicely visualized by it on the basis of graph. And this graph is showing quarterly figures.
Last 2 minutes, sir.
Okay. Okay. Now we can run analyze forecast with AI. If I press this button, then it will go with the data to the AI for analysis purpose. It will take the historic data as well as the forecasted data and get the insights from AI. So you can see it has analyzed it, and executive summary, ABC Private Limited is projected to experience steady growth in its financial performance over the next years. Revenue, it is giving all the insights, key trends and patterns. Total revenue from operation is expected to increase steadily. Potential risk and opportunities, relationship between different financial metrics, strategic recommendation, areas of concerns, and strength. You can see increasing total expense borrowing and declining cash and cash equivalents are areas of concern. So it has nicely analyzed the data with the help of AI. Similarly, if we select new startup, in the new startup also, because it is the new startups don't have historic data. So for the ease of reference, I have kept the variables at minimum. It is asking for initial revenue, for example, 1 lakh, and initial expenses, say we take it as 80,000, and initial assets 50,000, and initial liabilities also 50,000. And now it is asking about the growth assumptions. What you are projecting to growth, year 1 100% growth, year 2 50%, year 3 50%, in the expenses like this. And if we select more number of years, it will give more number of years option. And then we run forecast. It has given the visualization like this. Profits, it has nicely presented it. And then we can analyze it by using analyze forecast. So for startups also, it is very useful. It will analyze the forecast and give the results. This is an executive summary. The startup is projected to experience steady revenue growth. This one, analysis of revenue growth trajectory. The revenue growth trajectory is promising and all that. Balance sheet health assessment, cash burn rate, funding requirements. The cash burn rate is not explicitly key financial risk and opportunities, strategic recommendation for startup, monitor and optimize expenses to ensure profitability, diversify revenue, etc. and etc. Overall, the startup promises growth potential, but must be vigilant. So the key features of the tool are that it can extract data from any n number of documents and in any format, having any naming conventions, and then it structures the data in a standard format and uses world's best models for making projections, forecasting, and then analyze that data with the help of AI. And what I am thinking forward is we can enhance the insights of this data by integrating some useful custom GPT. For example, the institute is giving industry forum GPT. So if we can have the integration with that or something like that platform, then we can have insights of the industry also and compare our forecasting data or historical data with that also. This is the tool I want
All
to
right.
share.
Thank you, Pradeep sir. There is one question
Yes.
that how the underlying assumptions will be checked
Underlying
for
assumptions, sir,
forecasting.
when I developed the code with the help of Claude, so I asked it to give me the models which are worldwide acceptable. Then it gave, and then I also asked it to give me the assumptions. So I show you just a minute. So I ask the assumptions which it is taking for making the projection on these on the basis of these tools. So for example, linear regression, these are the assumptions, growth rate, these are the assumptions. If you want, I can dictate also. So, and while showcasing the tool, I told the assumption in brief also. For example, in linear regression, it assumes constant rate of change over time, growth rate forecast. It it is more sensitive to recent trends, use historical growth rates, assumes past growth pattern will
Okay.
continue. These are
Okay.
all the assumption of model wise. ARIMA uses more sophisticated for handling complex patterns, better for variables with cyclic components, etc. These are the models.
Okay. I hope attendees' questions have been answered.
Mm.
The voting lines are open for everyone to vote. Um, Now we'll go with the today's session is going towards the end. The last participant, Ekant Toshniwal. Thank